Mackenzie Investments released its outlook for next year, reporting they expect a broadening of market leadership with more countries driving market growth. Our next guest says investors should diversify beyond just the U.S. if they're overly concentrated there. Let's get more from Lesley Marks, Chief Investment Officer at Equities at Mackenzie Investments. It's good to have you today. Thanks for joining us.
Thank you for having me.
So you think investors should diversify more beyond the U.S. if they're mostly concentrated there? Why is that?
Well, first of all, I think that because the U.S. has been one of the top performing markets over the last few years, it's natural that investors would have a higher allocation to the United States. And we think that this has also allowed people to really ignore what's happening in other parts of the world. When you look at other markets, you get that diversification because they are more than technology, which is really what is the primary driver in the U.S. So we think that not just diversification by region, but also diversification by sector or exposure comes with looking at other areas of the world.
Okay, so let's start with regions and then we'll get into sectors. In terms of regions, what markets do you like right now other than the U.S.?
Well, of course, I mean, this may surprise some people, but the U.S. has not been the top performing market year to date. In fact, it has lagged most of the developed world when you look at year to date, particularly in Canadian dollar returns, which is most relevant for most Canadians. Having said that, technology was still a key driver when it comes to investment returns. The other area that was driving returns here close to home has been the gold sector. And so for investors looking to diversify into the commodity space, whether they're thinking about gold, base metals, even things like natural gas, uranium, Canada would be a very attractive place to look at for driving diversified returns.
Okay, so I guess you kind of touched on the sectors then. So gold instead of tech, maybe for people who want to diversify away from tech. Are there any other sectors that you think people or investors should be looking at for the new year maybe?
Well, I think that one thing that we're seeing around the world has been a very strong fiscal impulse. So that being a very strong fiscal support for economies. We're seeing this in Europe, we're seeing this in Canada, and we're seeing this in the United States. In all of these areas, what that will lead to is more of a capital spending cycle or a reflation trade, really supporting their economies. In that context, sectors in the industrial space will certainly benefit. Another area that we think could also benefit will be from the widening out of returns beyond the mega caps. You know, it used to be over the last couple of years, all of the earnings growth was really driven by the top 10 companies in the S&P. Now what we're starting to see is smaller companies are catching up, and the relative growth of the top companies is starting to come down. In that sense, you will see investors start to look more at the companies outside of the top 10 largest companies in the S&P and even spread right into U.S. small and mid-cap companies.
That's not the first time I've actually heard that today, talking about small caps in the new year. Do you think 2026 is going to be kind of a bigger year for the small and mid caps then?
Well, a bit of a mea culpa. We really thought that 2025 was going to be a year for U.S. small mid caps. We thought that we would see deregulation and consolidation really driving U.S. small and mid caps. We still see those factors as being important. Onshoring as well. Lots of aspects of the One Big Beautiful Bill Act really favor U.S. small, mid-size, or more domestically oriented companies. So we continue to believe that this will be a trend that will play out in 2026, even though it's taken longer than we expected it to.
Okay, you talked a little bit earlier about gold in Canada and the gold market. Do you expect other critical minerals like copper to drive Canada's growth over the next year or so?
Certainly, copper has a very strong fundamental story. And when I say that, I say it in the simplest of terms, in supply and demand fundamentals. There is certainly an increasing, a notable increase in demand for copper without a commensurate increase in production or supply. So the supply-demand fundamentals are very attractive for copper. Copper is one of the commodities that is used in all types of infrastructure building, but I think the one that people are most focused on is the capital expenditure attached to the data center rollout that we expect to happen all over the world. So definitely the interest in base metals will continue to build throughout this capital expenditure cycle.
Okay, so definitely a lot of mining companies in Canada could benefit. But what's your outlook for the entire business environment for Canada for 2026?
Well, Canada is a little bit tricky, and what I should say first is, the economy is not necessarily the stock market in Canada. And what I mean by that is there are lots of things that will drive the Canadian stock market in the face of what will be a more challenging economy here in Canada. A big part of our economy is very much leveraged to housing, and we have seen continuously data that indicates the housing market is softening, whether it's price or transaction. The housing market is, really facing some significant headwinds. So that's going to be very difficult for the Canadian economy to put up very strong numbers in the face of a weak housing market. On the other hand, we do have that strong fiscal impulse, which I mentioned. Our government is very focused on building infrastructure, shovel-ready projects, mining projects. These are highly capital intensive. They require a lot of spending on the capital side, but also do create a lot of jobs. So there is a bit of a push-pull with the Canadian economy. Canadians are also benefiting from the strength in markets. The wealth effect has been positive for Canadians, but we really need to see that housing sector start to stabilize to see better things ahead for our economy.